Good morning, everybody. Happy New Year. New year. Same bull market. Yeah. Good year for crypto so far. Crypto year to date. The year to date returns on crypto are looking real nice today. Of course, we've got all the charts. We've got things that we're looking at going forward. We've got things that we're looking at looking backward and kind of putting it all together. Todd Sohn is our guest today. He will join us at 9. Good morning, chat. Good morning, Doug, Rachel, Chris, T-Man, Brian, JR, Ravi. I said Chris already, or different Chris, two Chris's. Hope you all had a great new year, but we're back in the saddle. I got JC, I got Steve, I got the charts. Let's go.
Ho, happy new year, ladies and gentlemen. We are back. We're not canceled yet, so we got that going for us.
Not yet.
How about that?
Pretty good.
Strazza sure tried his hardest to get us canceled, but we made it through.
I wouldn't be the one getting canceled. We've been doing this for 8 months.
How about that?
Not bad.
Not bad. It's kind of a bull market show.
I think 9 months, technically. I don't
Since
know.
when? April?
Our first show was on. Oh no, our first show was May 17th.
Okay,
So
7 months.
Yeah,
6.5 months.
Yeah,
7.
Last year was the best year of my life personally. Speaking to some of you, you guys had some pretty good years. Spencer Israel, first year as a husband, right?
yeah. First year. Last year was a great year for me as well. This year is shaping up to be. I'm in a bull market too, so
Think about it, Strazza. We let Spencer Israel hang out with us. We let him tell other people that he's friends with us. I mean, just think about how good Spencer's life has gotten, right?
You're right, Spencer. It must be a bull market for you,
right?
Look
how red he turns. Look how red he turns because he knows.
He likes it.
He loves us. Dude, Spencer Israel's throwing up Fibonacci extensions and shit. He's like, come on, guys. What are you doing? I see you, dog. I see you.
JC, best year ever, huh?
Definitely.
Best year ever.
I mean, for me personally, business-wise, monetarily, health-wise, I don't win every year, but I won last year, so we got that going for us, Right?
Anyone do anything good over the weekend?
No.
Good. No.
Stayed home
a lot, man. I'm friends with too many Italians. Seriously.
I hear you.
Me.
I got too much Italian food in my life. I need a break. I need to get back on that Proman program. I have eaten more cannolis in the last couple of weeks. It is ridiculous.
Italians, there's just a lot of eating. There's always food everywhere, and usually a lot of it.
Yeah, the Cuban Italian combination is just not. It's just not part of the Proman program. It's just not. There's just a lot. It's just an overabundance of just stuff, like just more food and
Caleb Fronten in the chat is in Italy, and he's doing some boots on the ground DD as we speak.
Caleb Frenzen.
How much food?
Flexing his travels as usual.
How much?
We know you're in Europe, Caleb. Thanks. I've got. Listen, I got a good way to start the year. First of all, why don't you hit that bumper and then we'll get going.
Oh, okay.
Hey, we just got called woke. It's pretty cool.
What? Okay.
Well, so a couple of things I want to point out. Happy New Year, everybody. I want to point out that stocks are a little bit, everything's relative, of course, but in the red to start out the year. NASDAQ down 1%, Dow futures down 200 points, S&P down 35 handles, right? It's not crazy, but they're in the red, right? We can all agree on that. Bonds are also in the red. And, you know, you continue to see investors, particularly the worst ones, talking about how bonds are going to act as this like safe haven. Throw up slide 2. You know, bonds are going to act like some kind of safe haven, and you're going to see rotation into bonds if stocks sell off. You're not seeing that at all. At all. You might see it later this month. You might see it later this year. You might see it later this decade. Maybe you see it this afternoon. I don't know. What I can tell you is that you're not getting that defensive trade. You're not getting it at all. They're moving together. Spencer, am I crazy? Is there any reason to think that there's a negative correlation between these two assets? Or is it quite obvious, even to perhaps an untrained eye, that these two, in fact, are moving together? Any arguments here?
No, I mean the last couple of years, there it is, right there, right? That's the last 7 months, but
Yeah.
you get the idea, right? Yeah, historically it maybe is one thing, recently is something else.
You know, there's different regimes when it comes to these relationships, and we've seen regimes in the past, particularly when inflation was a concern in the 60s and 70s, stocks and bonds moved together. You know, when deflation was the concern over the last couple of decades, you've seen that inverse correlation where treasury bonds acted as a safe haven, the most safe of havens. We're just not in that environment at all. Right?
Or in the opposite.
The inverse correlation is stocks and interest rates, right? Stocks and bonds are moving together, Strazza. Why is it that you think that some investors are having such a hard time wrapping their heads around something that's so obvious? I mean, look at these two lines. Tell me they're not moving together.
They're used to them moving in different directions. Simple as that.
And is it just like, you think it's ignorance, or do you think it's stubbornness?
It's just what they know. It's what people know.
Right. I think that's like one of the most conventional thinkings there is. It's like,
well, that's
as conventional as stocks go up, is that stocks and bonds are a good diversified portfolio. So
that's the dumbest shit I've ever heard. That's so stupid. Who made that up? That's terrible advice. The 60-40 portfolio, as dumb as it's always been, is even dumber now because 60-40 is 100 if they're moving together. So it's the 100 portfolio, right?
You don't know
is it 100, right? That's what the kids say, 100.
You don't own any bonds, JC?
Do I own any bonds? I don't own any bonds. No.
Zero.
In any strategy, in any portfolio, I got nothing.
Really?
No bonds. I mean, I've owned bonds. I will again.
Yeah.
I don't now, to answer your question.
Likewise.
No strategy I have has any long exposure to the bond market at all.
Same.
How do you feel about that? You think that's irresponsible?
I'm surprised. I'm surprised the guys didn't try to get you into some bonds.
Which guys?
Your retirement.
Oh, you know what? No, I don't think so, actually. I don't think I'm in any bonds. I can find out. Shows you how often I look at that account. I can find out, but I'm pretty sure I'm 100% in equities because I'm so young.
Okay. Yeah.
I'm young, and also like I have like other assets that are more defensive, I guess. I got no
there you
bonds.
go. So why would you? Why would I? Why would you, Steve? Why would any of us?
I'm just asking the question. I'm not suggesting that he should.
I'm just listening to my financial advisor. I don't know. I'm not good at that sort of thing. I'm good at other things.
Are the markets going to roll over and everybody's going to freak out this week?
I don't know about all that, but I think we should definitely talk about what the market under pressure probably looks like, an environment where a more defensive posture is probably best, right? Why don't we take a look at Exhibit A, the NASDAQ 100? You may have heard of it, kind of a big deal, Strazza.
Yeah.
Talked about it last week. If the Qs are below 400, they're vulnerable for further selling. They're vulnerable for maybe even a sideways chop. Either way, reasons to be more defensive, reasons to be less aggressive from an equities perspective, right?
Does this period with this price action remind you a little bit of July, where it's not the same groups and indexes per se, but there's a lot of groups and indexes just running into really obvious overhead supply zones, like July?
Yeah. Yeah. I mean, it's similar, sure.
You could draw a lot of charts like this right now, I guess is what I'm saying.
Yeah. Well, let's draw another one. So if Nasdaq 100 QQQ is below 400, the direction, the vulnerabilities to the downside, right? The risk is to the downside or sideways, not up, right? Look at the Russell 2000. Here's another one. Here's your 18-month range that everybody's been talking about for so long. Trying to get back above that, a failure below that, back below 200. Again, probably sets up a pretty vulnerable position, no?
Down almost 1% here, Russell 2000 futures this morning. This little base breakout looks like it might come undone here.
Maybe.
Let's watch it.
Now, let's remember, it doesn't have to be a crash. It doesn't have to be 1987 and 2008 or 1929 or all these things. It doesn't have to be any of those things. It could be a false start.
Yeah. Yeah, right.
We've seen it plenty of times. That doesn't change the fact that if the Russell 2000 is below 200, the risk is down to sideways, not up. I would argue if we're above 200, the risk is up.
Yep.
Right? An environment where we want to be buying, not selling.
And then, of course, what if we're just hover around 200?
That's probably a good thing. The market absorbing that overhead supply, recognizing those key resistance levels, digesting that, and then moving on. That would probably be a positive. That would be constructive, I think.
Okay. When does the Santa Claus rally begin? What date?
It began on Friday the 22nd.
Oh, it's that long. Okay.
7 days every year, bro. You new around here? Thanks for coming.
Those gains could come undone.
Can we look at consumer staples? Because when we talk about safe havens, it's not U.S. Treasury bonds, as the market continues to prove. So it's not like I'm throwing out like just these accusations. With every day that comes by, with every data point coming through, the market just continues to reiterate that bonds are not a safe haven. Stocks and bonds are moving together.
I don't like this chart.
What is it that you don't like about it?
What do you got the candles for? It's a ratio.
You don't like the candles.
Big mess. Big mess.
All right. So line it up. You can make a line. You can make a line chart if you want. If it's going to make you feel more comfortable, help you sleep better at night, that's fine.
You don't do this. Since when do you do this?
I was in a different kind of mood last night,
New Year.
There was an overabundance of food and drinking. So I figured, stick with that theme and go with the fat candles as opposed to the skinny lines, I felt it was inappropriate, disingenuous perhaps to go with skinny lines versus a fat candle.
Fine. I'll give
I was in a fat candle kind of mood, drinking my Amarone della Valpolicella, which, by the way, let me tell you something. I've been drinking Amarone lately, and I've been recommending it lately, and talk about a crowd favorite. People love Amarone. I think it's like, what I think it might be? Because I recommended it to a Puerto Rican guy, and then my dad had it, so he's a Cuban guy. So, these Hispanics, they got a little sweet tooth in them, So the Amarone's got it's a little less dry than a Barolo or a Brunello, right? It's got a little hint, right? Because they let the grapes dry, right? So you're getting a little hint of that residual sugar. Not a lot. It's not sweet or anything. It's just slightly less dry. And man, people are loving the Amarone. I love Amarone too. I think a lot of people love Amarone, but a lot of people don't even know what it is, which is crazy.
I know what it is.
Yeah. Well, you have a lot of vowels in your name. You better know what it is. If you're Italian, you don't know what Amarone is. What kind of Italian are you? Anyway, So speaking of fat candles, if we're back above those late 21 lows, which by the way, notice how late 21 was the top in equities. It was the bottom in staples relative.
Yep.
Because you see, treasury bonds are not the safe haven. Consumer staples on a relative basis actually are. And the market continues to prove that as staples underperformed all of 2023. And what happened in 2023? It was a great year for investors. It was almost impossible to not make a ton of money last year, right? Some investors found a way, but it was really hard to not make a lot of money last year. And in that environment, consumer staples underperformed, which is perfectly consistent with healthy market environments. If consumer staples start to outperform, if staples are squeezing above those former lows on a relative basis, what does that say about the market environment? I would argue stocks are probably under pressure.
I think we could really make this point better. You flip this chart over, SPY XLP, overlay it with the S&P 500.
Yeah.
This chart's failing at the same time that stocks are failing at those old highs on an absolute basis. Like you said, those 2021 lows here are the same as the 2021 or 22 highs in the indexes. They fail together, right?
Couldn't you also say that it's just basic rotation? Staples haven't joined the party yet.
Not really. You don't want to see them outperform for any sustained period of time.
To Spencer's point, though, consumer staples do well in bull markets because consumer staples are stocks. What you'll find in those bull markets is that when markets are correcting, when stocks are correcting within those bull markets, you'll get a relative bid in staples. You feel me, Spencer? It doesn't mean that it needs to be this crash or end of the world. You can have rotation into staples while stocks are correcting, and it still be a bull market. You feel me?
You can have rotation into staples while the indexes are maybe going down or sideways.
And a lot of stocks, some of the more offensive groups.
Okay.
You know,
you saw it from like February to May of this year a little bit.
Yeah, right, exactly.
All right. I mean, I guess, you talk about it all the time about rotation, and there's only so many places to rotate. Eventually you just run out of room.
Well, when stocks are making new highs, the rotation is going into industrials, materials, financials, technology, communications, even healthcare, right?
You just named all of them except for the defensive ones.
Yeah, because they're not rotating into defense during the market.
But if they're rotating into defense, stocks are probably under pressure. Hence, if we're back above those late 21 lows, stocks are probably having a hard time. Volatility is probably slightly elevated. The VIX is up to 14. It's a lot, it's higher than it's been. We'll be incorporating different types of strategies. We will be taking advantage of higher volatility as opposed to what we've been doing is taking advantage of low volatility, right? There's a time and a place for everything. Right?
Okay, so I guess the question that I'm having that you're answering here is rotation among the offensive sectors can just go back and forth, ping pong ball between the offensive sectors. Right? Yeah. It doesn't have to. It's like once we moved on from a sector, we can come back. There's no rule.
No, that's right. And we saw it this year, right? We certainly saw it this year. The leaders off the lows in 22 were industrials, materials, financials, and technology and growth took over in Q1. And then come the summer, you got the rotation back into those original leaders. Then rotation went back into technology. Then you got rotation into small caps. Right?
Got it.
And then finally, the safest of all havens, the almighty dollar. And the dollar index is kind of messy. So it's hard to identify like a key level that would suggest, that is the level. I think this 102 area is probably pretty good, Strazza. It would invalidate this latest lower low, right? There's market memory around this area. That would be an interesting look if dollars are above 102. How do you feel about that? Too cute?
I think it's a little cute, to be honest.
It's a little cute. How would you identify? Because I think you'll agree this is the safest of the havens, right?
The levels I gave on last week's video, lines in the sand. for the intermarket, 4% on the 10-year, and I think we did 102.50 on the dollar. But I zoomed out to like those prior cycle highs, so it's an important level nonetheless. And as you zoom out, you see why more and more. So 102 is good. That's fine. You have the
It's a little
lower bounds
cute.
of that range though too.
Yeah, it's a little cute, but all right, let's do a quick rundown of the market here. You got the Dow futures down 240 points, S&P down 40 handles. It's about 80 basis points. Nasdaq down 1% on the Qs, down almost 200 points. Bond futures also down 1.15% on the 30-year.
Yeah.
Which again, stocks and bonds are moving together. Treasury bonds are not a safe haven. You'll notice that the dollar's rallying today with
Ripping.
stocks selling off. You know why? Because the dollar is a safe haven. And by the way, the market keeps proving that, literally. Like in real time, the market is proving that bonds are not a safe haven and the dollar is. Gold flat, silver flat, copper flat, oil up over 2%, natural gas up over 4%. Euro and yen each down over 75 basis points as the dollar's rallying. You got the volatility index up to 14 on the VIX. Big move. Teenager once again as yields rise towards approaching that 4% mark. And then, of course, in the old funny money, big moves over the weekend. You've got
Interesting, JC, to see this with dollar and rates ripping today.
That's right. Bitcoin up 1,500 points right now, making new highs up towards 45,700. The correlation between stocks and Bitcoin have been high, but not as clean and as tight as maybe some other relationships. So I wouldn't overthink the relentless strength that we're seeing in cryptocurrencies, or do you think it is worth overthinking?
What I have been thinking about, I don't know about any of that. What I am thinking about is throw those charts back up. What an orderly uptrend it has been, right? For Bitcoin, Ethereum, and friends. Throw up the crypto chart. If you were to zoom out here, and you can kind of see it in the lower left of the Ethereum chart, we went sideways and consolidated for most of November, or 2/3 of November, ripped higher for basically 1 week, the first week of December, and then it's been sideways coiling again, basically all of December. Right? We're not going in a straight line higher. Sure, we could talk about Solana, AVAX, and what some of the best ones are doing, but most of them, look at a chart of Cardano. If you want to see a really, really orderly consolidation, then rally, then consolidation. This is good stuff. This is good stuff.
Yeah.
I mean, what?
No, it looks pretty orderly to me.
Yeah.
Yeah.
We're not, this is no like melt up. This is no
Right.
euphoria. We're not there yet. It's just
I think though the market moves just so much faster than other markets that it might feel
right.
like, oh my gosh, Bitcoin
percent
just
gains
broke.
are big when they move.
What?
The percent gains are big when they move. So
Yeah, no, but for maybe people that don't look at it every day, they look once a week or whatever. Oh my God, Bitcoin just broke above 30,000. Well, yeah, that was like 2 months ago now,
Yeah.
right?
Yeah, right.
So
it's been really orderly, a really healthy uptrend here. Categorized by up legs and then nice little coils, consolidation phases, and then new up legs. So I think that today's new highs is probably kicking off a new little rally phase higher. So see where it takes us.
I mean, damn, when was the last time Bitcoin was even up here? It was March 22. March of 22. It's been almost 2 years. That's
since it's been at this level.
Yeah.
Pretty good, right?
That's 22 months of waiting. So
let me see.
And then the all-time high, of course, is frankly not all that far away. 69,000.
I mean, some of these near up 14% today. H bar. People like this one a lot. Sedera hash graph. H bar up 13% or 12%. Waves, another 12%. I'm trying to pick ones that people have heard of. Dash, Blur, 9%. ILV, another 9%. Axie Infinity, That was a old dark.
Oh wow, that's a blast from the past.
8%. Solana, almost 8%. So ripping out here today with the dollar. I mean, this is a big candlestick in the dollar index, and rates their biggest move in about a month. So to see these cryptos break out with that going on in the background, I think that's super bullish.
Well, I mean, to Rachel's point in the chat as well, we're talking about rotation among the sectors, but the price action in crypto suggests surely that we are still in a risk-on environment. So, yeah, hard to argue against that for sure.
What was the biggest move over the holidays in cryptocurrencies that stood out the most to you?
They were correcting mostly. I've been watching Near. Near's been looking good. Yeah. Oh, well, I was just saying to Spencer, how orderly it's been. We've really spent most of December just coiling, consolidating, digesting the gains. And now it looks like maybe a new up leg.
A lot of these consolidations are resolving higher, right?
I bought some of the Elrond.
Wow. What type of market environment are we in when Strazza is buying the old Elrond?
Got me some Algo.
That was before your time, Spencer. It was before your time. You know how you can rattle off all the pot stocks? We can rattle off all the shit coins that we used to trade in prior cycles.
Remember Axie Infinity?
I mean, I
oh yeah.
Just because I don't trade them doesn't mean I'm not well versed in the shitcoin universe.
Are you familiar with the Elrond? Are you?
Do you own enough Shiba Inu?
Oh gosh, Shiba Inu. Who?
I don't think it sounds like he doesn't.
Yeah.
No. No, but look, last night I was doing my annual review of my accounts, my allocations, et cetera, and I still got a pretty, you could say, underweight allocation to crypto in the grand scheme of things. I've got some room here. I've got some room to grow. So.
Let's go. It's not too late. Get your bull market shirt on and get involved in some of these cryptos.
Yeah.
So we've got Todd Sohn coming on to start the year. Solid, right? Solid beginning to the year. We should just end on a high note, call it a year.
How long do we make it through this interview before JC starts asking him about money market funds?
Honestly, I hadn't even thought about it until you just brought it up. We know what he thinks about. What time's he coming on? What time's he coming on?
When's he coming on?
I got some good stuff for Todd here.
Like 15 seconds.
Oh, well.
Yay. All right then.
Well, all righty.
Yeah.
I say we bring him in. Bring him in.
All right. Todd Sohn from Strategas. Here we go.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Todd Sohn.
What's up, guys?
How's it going?
Happy New Year.
Happy New Year to you. I got a question for you, Todd.
Oh, come on, let's go.
You grew up in Westchester, right?
Yeah, New Rochelle.
New Rochelle.
Home
and
of Ravens legend Ray Rice. Remind you that.
Also the Mad Rapper, if you recall from back in the day, the Mad Rapper.
I don't know that one. I don't know.
Oh, maybe you should step up your hip hop game there, Todd.
Yeah, that's a weak spot for me.
All right. Fair enough. Okay, so grew up in New Rochelle. Is New Rochelle technically Westchester County?
Yes.
It is. Okay.
Yeah,
and you live in the Upper East Side, correct?
I currently live there, yeah.
Okay, so pretty much smack dab in the middle is Arthur Avenue.
How
much time are you spending in Arthur? How much time are you spending in Arthur Avenue these days?
Oh, that's like a once a year thing. I don't go to Arthur Ave much.
Are you like one of these bougie Manhattan? I don't leave the city. I got my own borough. I don't need the other boroughs. Are you one of those?
I might be a little bit actually, but the kids come into play here. I can only take them so many places.
Fair, it's fair. I understand. Strazza doesn't understand. I understand. All right, so you are underutilizing Arthur Avenue. To your point, you've got Campagnolas, you've got Elios, right?
Yeah, or old school, yeah.
Right. So you don't have to
I
go.
hardly get out nowadays.
Right. You don't have to go to the
Hardly get
Bronx,
out to
though.
those.
You've got some local. You can walk to these places, I'm sure, right?
I'm very, it gets a little old, some of the restaurants up there, because I've eaten at them so many times, but it is what it is.
Tell the wife.
This is
Tell the wife that JC said to get up to the Bronx. Get some good eats and well
I mean, it's
priced up
easy.
there too.
Oh yeah, it's easy to get to. It's just a
It
matter
is.
of getting off our tuchus here and
Right.
getting on the train or in the car.
Once a year's a little disappointing. Once a year, especially you're so close.
I know.
All right, just
there's
throwing
a
that
lot
out there.
There's a lot of stuff we could be doing more of around the city, but with kids, you're just tired every friggin' day.
Yeah, one day Strazza will understand. Speaking of tired, is this bull market tired, or are we just getting going?
No. I listen here. Here's my main theme. I think at least it makes sense today to me is perspective, right? Stocks are up pretty nicely over the last quarter and even the last year, right? 24% S&P was up, but you are just breaking out over the 2021 highs. So to me, I say, okay, yeah, we're overbought in the short term. The new high data expanded a couple of weeks ago. We got 90% of the stocks with their 50-day, really good momentum. But over the last couple of years, you haven't gone anywhere. I think that's great.
Yeah.
So yeah, you'll get correction speed bumps here and there, but I think you got to take a step back and realize a lot of stuff just had a really difficult couple of years, especially for the smaller stocks too.
What about these breakouts that you speak of? Can we call them breakouts? Like, can we just put a stamp like we are officially resolving these 2-year bases higher? Can we say that?
I think that's my base case. Maybe you get a little pushback here and there as you're starting to test those levels.
Little false start, maybe little false start action.
I think false starts. I'm a speed bump guy. I like speed bumps.
See, that's why he gets paid the big bucks. That's why he gets invited to the best morning show in finance.
That's right. So I don't think he put the stamp on it definitively, but the evidence is certainly there in terms of momentum and breadth.
Yeah.
But of course, we all know, we're finally breaking out. We know what happens. Sentiment starts to run hot, and then you get a nice little shakeout. Whether that's a 8% or 15% shakeout, we don't know. But I still think you have to view it as a one you want to be looking to buy, right? That we're getting more involved in to add exposure. Just be a little patient. And keep in mind, there's a lot of, there were high beta growth stocks that were down 80 or 90% over the last couple of years. Maybe those names never come back, but I still think there's a lot of opportunity down there to find those winning stocks, the ones that will emerge as the actual leadership from
when
there.
you say down there, are you talking those bad performers, or are you talking cap scale?
Both.
Some of them have already come back.
Yeah. Small cap tech is a little bit more selective, but small cap discretionary industrials much different. Very, very better. Much stronger. Sorry. I think about ARC. I think about those names. That whole universe. Coinbase had a great year, right? A name like that. We'll see if that one can ever get back to where IPO'd, or I'm not even sure where that is relative to today, to be honest with you. But from that universe, I think there will be emerging some leaders who are actually well-run businesses, and the market will reflect that. And there will be ones that never come back at all, and they stay down wherever price they're at, below $10 or something like that.
Todd, I really like what you did with this 10 ETFs to gauge 2024. 2024.
You're too kind.
Throw it up.
It took me like 5 minutes to find this in our chat. Me, Patrick, and Todd are in a group chat where you would think we're all sharing charts with each other. We're just sending each other gifts and memes.
It's the troll chat.
Nerd alert.
It's me just to troll Strazza, and then Pat's just kind of on there on the side trying to do stuff, and I don't. So yes, very good.
So what are all these letters and numbers? What do they mean to me, you think?
Tell us what you did.
So there's over 3,000 ETFs.
Wow.
And ETFs, they have a dual process, right? They're a dual purpose. One is for long-term investing for whether it's our children, whoever, whatever your process is, right? Saving for retirement. And the other one is to help gauge market conditions and the sentiment of the market. There's so many ways you can do this. And we're splicing and dicing up ETFs, the equity market and bond market and commodity market, so many different ways. So I try to distill down those 3,000 ETFs into 10 or so to help you gauge the conditions of the market. Right, and it'll vary by quarter, it'll vary by half, and so this is just my first half list right here. And
you
I
very
wanted
a
to,
lot of creativity in what you've
yeah,
chosen here.
I'm not gonna put SPY and QQQ.
Right.
That's not what I'm here for.
No, this is great.
You know, there might,
Right.
ARK is a popular one, obviously, but I do think ARK is very important this year because of its reflection of interest rates and I think sentiment too.
ARK is best when it comes to just like, you know, high growth index. It tells us a lot about risk appetite.
Exactly. I think that's a real message there, right? But I also like this idea of using the Magnificent Seven fund from Roundhill. Those are nice, great guys. They launched this product last year because they realized there's this zeitgeist going on.
Yep.
And so if I'm trying to say, okay, well, where's the real leadership? I can do MAGS relative to RSP. That's the equal S&P 500.
Yep.
And there you go. That's a new tool just created for all of us because of what ETFs are going on here. I like the idea of paying attention to BIL. That's basically your money market equivalent in an ETF. A lot of cash in that fund.
Hold on, and what specifically are you looking for? The behavior of these ETFs or the flows?
The behavior.
Got it.
The behavior. Absolutely behavior. I mean, the flows will be there. Interesting. I look at flows at more of a high level, right? I'm going to group together tech. I'm going to group together semis. I'm going to group together bond and cash-like instruments. These are more to say, okay, what's the condition? Where's leadership going? Exactly to your point, what is the overall message? I think that's really what the idea behind this list is. There's credit on here. There's cash. We got value. We've got the dollar. I know you guys have talked about the dollar a lot. And then international.
Yeah.
Every year starts off, is this year for international? Is it actually going to outperform?
Every year.
The rug always gets pulled.
Why EWJ and not DXJ? Why do you want to price it in dollars?
So I like EWJ because it's unhedged. And if we are to assume, we're going to assume, assuming can get you in trouble, that the yen strengthens, the dollar is weakening, the yen strengthens, that means you want to play it unhedged.
Yeah.
But you can go perfectly. I also, if I'm being pragmatic and practical, I also like the idea of going 50-50 EWJ DXJ just to rule out your.
And what about Europe? Do you do that same strategy with Europe?
Yeah, you could do the same thing with Europe. Take out the
50-50, eliminate the currency risk altogether.
Yeah, I think India, Wisdom Tree is coming out with a hedged India product too. We'll see if that actually matters.
Of course they are.
At some point.
I think India on this list is one of the more interesting picks. Big to China here, huh?
India seems to be the China divestment beneficiary.
Yeah, Vietnam too.
Yeah, that's much smaller, right? Bigger allocators can go to India, I think, before Vietnam. But India's been strong, right? That one's been super strong. It's got a decent constituency. It's more tech and consumer heavy. It's not financials and staples like you have in Europe. So I like the idea of playing India, especially as EM ex China really gains steam here. That's a big theme for a lot of folks, I think.
Can we get this cumulative net flow so we could get into money markets and cut the crap?
Oh, here we go.
Give it to me, Todd.
Okay.
Give it to me. Why should I care or why should I not care about these flows into money markets? Explain to me what this matters.
So this is data through the end of November. I just refreshed this morning. They come out with the new data every month.
Ooh,
ICI.
Fresh one.
And what I find amazing about this, now this is ETFs and mutual funds. So for equity, you get a little bit of cannibalization, right? Money out of mutual funds, money into ETFs. But if you just looked at the fund industry over the last 40 years, money market funds are the best selling product. I think that's amazing, considering they're the most boring and they're the one that give you the least return for, in bulk, right? whereas equities have been under pressure in terms of flows from mutual funds. And I think it speaks, especially over the last year, we had over $1 trillion going to money market funds. It speaks to, I think, this larger apathy for the equity market. And going back to this idea of perspective, that we've gone sideways for 2 years, a lot of stuff starting to finally perk up. Does that cash eventually come back out here? Because it usually does. And then, during crises, money markets tend to spike up again. But I just think it's amazing over the last 40 years, money markets have outsold in terms of flows, right? Most of the flows have gone into that vehicle.
Those peaks,
that make sense?
Those peaks in the red lines, those are great times to be buying stocks, correct?
Yeah, exactly. It's crisis moments for equities that are painful, but eventually you do find the market low and it's a great time to buy, right? 2020, 22, 2009, all the way back into the early 90s.
When making a chart like this, why do you choose an arithmetic scale?
I blame Excel. Excel, when you log an Excel chart, I just hate it the way it looks.
Yeah, they look crazy.
So I'll take the L on that one.
Okay,
totally
all right.
Yeah. No,
just wondering.
Really surprising. Think of what stocks have done over the past 5 years. Net outflows for equities over the past 5 years.
It's a partially a mutual fund issue.
Okay,
but that's the data, right? Money markets are still taking it. When money markets take in money, people flock to them.
That's crazy. And
it'll take a rate cut, multiple cuts for that money to come out, because then it loses their shininess, right? I'm only getting 2% or 3% instead of 5%.
Todd, what about like market, a total money market as a percentage of overall equity market cap?
Mm-hmm. Yeah,
it becomes less egregious when you look at the data.
It's less egregious. You're correct. It's less egregious. I have that chart. I can send it to you.
I have it. I got it. Don't worry about it. We're good. I'm just wondering your thoughts on it.
So, if I'm thinking about this correctly, it's not as egregious as it was during, say, 2008 or even 2020, but it has been rising over the last year, which is kind of interesting to me. This is kind of slow and steady, maybe
less shock factor 50? When you're looking at it relative to overall market cap.
Less shock, but it is rising as equities rise. So I think that's kind of the key twist on that, is that it has gone from 12 to like 15 or 14%. Very modest. But I do think that it's important that it is rising. But yes, of course, less shock factor. There is more money available in today's world, right, than 30 years ago. But I also think it's still, you get $1 trillion in last year. How much of that eventually comes out and back into stocks?
So you're suggesting that all of this money in cash is a tailwind for equities versus the thesis that all these people in cash actually are going to be correct.
It's not about being correct. Don't you think this is sticky money though, Todd?
A large chunk of it is sticky. That is definite.
On the retail side, maybe though, right?
Yeah, retail.
Institutional.
The institutional side's tricky because if you're a corporation, you can just toss money in there, and I'd say you're generating cash for capex, whatever you want to call it. Some of it will stick because people get older and they just want to collect income.
Yeah.
But as you can see historically, once rates get cut, assuming they do at some point, I don't know if it's this year, next year, whatever it is, that money has to come back out because you're not getting as high as interest. And so it likely should flow back into equities.
Yeah.
The question is though, how much comes out? So if there was $1 trillion in last year, is it 200 billion? Is it 50 billion? I don't know what the ratio will be.
And those are material numbers.
That's the hard part.
What's that? And those are material numbers to equity flows?
You would think so.
A couple $100 billion.
Equity ETFs did 390 billion last year. Decent. So you get 100 billion of that.
Yeah. All right.
I think it makes sense on the surface. There's probably some more nuances in there. But it all comes back to rates. If rates stay where they are, then that money is going to keep piling into money market funds. There's a lot of anecdotal conversations for last year too. Not everyone, but a lot of clients I spoke to said, "Oh yeah, we're happy with our 5%."
Todd, if I told you that rates were going to continue to move lower throughout 2024, maybe, we end up with a 10-year sub 3%, what is the best group of stocks to own, you think?
So if rates continue to move lower, and you said, what was that last part? Did you say 2%?
Sub 3%, maybe end the year on 2.5%.
I wonder if REITs make sense there. REITs kind of get interesting to me.
I think that's
REITs get interesting to me. It's hard to argue against tech.
Yep.
Especially smaller cap tech. That makes sense from a textbook perspective.
Yep.
But I'm trying to get a little bit more. Okay, what was really pressured by the rise in rates last year? It was REITs.
Totally.
Utilities and staples, of course, but I can't get on board with those. They're just disasters of charts. The REITs are kind of interesting to me.
Can we throw up new slide 2, 3, and 4 there? I want Todd. I'd like your thoughts on this one right here. This little nugget.
And to Todd's point, just real quick about real estate, large cap real estate spiders up like 25% just since rates, kind of peaked.
Good run. I think that's the case where the sentiment got way offside. Yeah. Everyone's freaking out about New York City real estate, CRE, all that stuff, and like, okay, maybe these don't get back to a new high, but they've had a really good rally.
Yep.
Healthcare.
Flip through the next couple just to kind of give some perspective here. Sideways range over the last couple of years.
So
little smiley
I forget
face.
if we had.
Oh wait, long-term
I forget if we had talked about this. Healthcare. If I had to do a list of contrarian idea for next year, healthcare is one of my favorites.
Is it? Oh, it's contrarian because no one's in it. All right, fair. Yeah, true.
Yeah, they had huge. The healthcare sector flows were very negative last year. A lot of outflows.
Look at that long-term uptrend. Come on, look at that.
Yeah, it's been remarkably inconsistent on a relative basis, and I think I got to rerun the numbers. If you look at healthcare relative to the S&P over the last 5 or 10 years, the relative returns are in the bottom decile. So you're timely, looking at your chart here, timely on an absolute basis. Sentiment's not great, and relative returns are statistically significant in terms of underperformance. So I think that makes a good setup.
I don't like it.
Now, do I buy XLV or do I buy XBI and kind of get some more juice there? Because if rates are on hold or even a cut, that should benefit.
What if you pull a Japan and do both?
You could do,
You can barbell those bastards with the big healthcare names and the shitty little biotechs. How you doing?
I like the XBI for that exposure. There used to be a junior biotech fund. I think it's gone.
Wow, I think it was IBBJ, I think was the ticker. Wow, that's aggressive.
It's around.
Junior biotech. I love that. I had no idea.
That's the real juicy stuff there. So just stick with XBI instead.
Okay.
I like it if you're looking for something timely.
I have something to say about this. Todd, why would I buy large cap healthcare in a bull market? These stocks are defensive. What say you?
JC, I think you asked me this sometime.
They can act defensive or offensive. They can outperform in a healthy stock market environment. By the way,
I've racked my head. Yeah, they can participate in a bull market, right? Can they outperform? Yes. And I'd be curious to know what is outperforming. If biotech is outperforming, that's great. Right? Nothing wrong with that,
dude.
The one you racked my head about was when managed care outperformed.
Yeah.
Over the last decade.
Yeah.
And I don't know if I have a good answer to that, because managed care, I think, is seen as defensive. It's just defensive. They're good businesses, clearly, considering the healthcare system. I don't have a good answer for that.
All I know, if you overlay XLV SPY with staples on a relative basis, same looks almost identical.
No. You're wrong, Strazza. Stop misleading the audience.
I'm looking
throughout 2012, 13, 14, consumers healthcare outperformed that entire time. We were in a raging bull market. By the way, utilities can outperform in a bull market as well. You saw it in that 04, 05, 06 run. So I would not
2014, right?
I would not overthink the defensive consistency of utilities in healthcare. I think there's a time and a place. I think staples are the one that are more reliably defensive, right? Todd, tell them.
I can work with that. I would take staples as we're getting more defensive than healthcare for sure. Utes more so than healthcare, but there's also a rate. There's a big rate influence for utilities, obviously. Staples are the one where it's like, okay, I'm going out to buy canned goods
Right.
instead of buying a Rivian.
That's right. I'm going to buy cigarettes and booze, you know?
Yeah, that is toothpaste.
Right.
That's the one I always defer to. And that's why we look at discretionary versus staples.
Condoms, right? Condoms is a good one, right?
Of course.
Church and
Semis
Dwight.
versus staples, that's a good ratio to look at because semis are in luxury goods. I mean, they're in everything now, but they're in iPhones and whatnot. You got to pay a lot for an iPhone versus staples, which I'm not paying a lot for, generally speaking.
Yeah, look at that base in the condom maker, Church and Dwight. Nice multi-year base. If you're looking, you know, right?
Sure. I don't know what else they make. I forget off the top of my head.
Does it matter?
No. But I mean, the other staples, they just don't do it for me. Coke, Pepsi, Colgate,
Costco,
Walmart. Costco's the best one. I don't even know if that is a true staple.
Technically, it's a staple.
You go to Costco,
it's got to be a discretionary. Come on.
You go there, you spend $300 minimum.
Thank you,
dude.
It's got to be a discretionary. And by the way, while we're on the subject, how are pot stocks not staples?
Agriculture.
They're listed as healthcare. Believe
I don't know about. I don't know. You got to take that one with Gix.
Who cares?
How are right? Who cares? Because they're not. There's no market cap there. But they got to be staple. They're going to smoke pot regardless of whether the economy is good or bad. It got to be a staple.
That I can't wait for the Gix update in 5 years on that one.
Because think about it. You got cigarettes and booze. If cigarettes and booze are staples, why aren't pot stocks staples?
It's a good. You should write a letter to the Gix. I don't know.
These are the things I think about.
But,
you know.
It's a good question. There's a lot of stuff like that. Why is it Costco?
I think it's a good question.
Walmart wasn't discretionary years ago, and then they switched it.
It was. Yeah.
It should be a
Walmart to
discretionary.
me is more. Yeah, I don't know. Walmart to me is more. I guess like a Target, which I'm not spending $300 at. Costco, I'm spending $300.
Dude, Target sucks, huh?
When
are they gonna? What's the over under? How long does it take the geniuses over at Dow Jones to kick out Walgreens from the Dow 30? How long? What's the
that I thought it would have happened last year because the weight is minuscule at this point because the price has been so bad. I would be surprised if it did not happen in the first quarter or half of this year.
What do they add?
And then what's the price of Amazon right now?
Too high.
I don't think it's. Is it too high though? I think they split.
Did they split?
It's like 100
last year.
It's doable. They can add Amazon. Good call, Todd.
That's what I mean. Like that would be my if I'm Mr. Dow committee. That would be my substitute. And it's more. Amazon is way more reflective of the American economy.
You're right.
And Walgreens.
And they split for that reason.
Yeah, 100%. Google did too. Did it not?
That's the technician conspiracy right there. Is that they split.
Google too, though. Google also.
Google a higher price?
Google did a 20-for-1 in July of 2022.
I like Amazon going in. Get rid of Walgreens. I don't know why.
Wow, so that's the call. Q1, kick out Walgreens, add Amazon. Wow. Any other changes? Any other changes you think they make?
Who's the second smallest? I should know this, but I don't.
3M?
Off the top of my head.
The second smallest?
Is it 3M?
Not 3M? No.
It's Dow.
3M I don't even know if it's in the Dow.
Dow, then Travelers, then 3M. Dude, Walgreens is almost no longer a large cap stock. Like it's going to get kicked out of the S&P also if it's even in there.
Yeah. What about Verizon? Kick out Verizon and add Google.
I like it because I got YouTube TV. I still use Fios for my internet, but let's be serious. It's a Google world rather than a Verizon and AT&T world at this point.
100%. And they split, same idea as Amazon. So you bring in Amazon, you bring in Google, and you're going to take out Walgreens and Verizon.
Yeah.
In Q1, you think that happens in Q1?
Q1, if I'm a little nervous, I'll say first half. They do it. They're so random.
Right.
The committee is very random.
How does it work? Do they just wake up one day and be like, all right, guys, let's get together?
I think they get together and they're like, oh, let's look and be active managers. And somehow it works out.
It does. As much
shit as we
give them, it works out.
I think they wouldn't do both of those just to spite S&P. because then you're getting too similar.
I mean,
You
have
know,
you
they-
zoomed out on a chart of S&P and Dow? They look
I know
exactly the same.
there's remarkable
Remarkable.
correlation between those two, despite the different weighting mechanisms.
It's crazy. Like, I mean, it is wild when you short term and long term. Like, it's not like you're cherry picking time horizons here. Like, go back to 1950, they looked the same. You know, go back a year, they look the same.
I'm amazed by how they are the same despite the difference in weights. I mean, you can do that with the Nikkei and the topics too.
Yeah.
I think they're similar-ish, maybe not as tight.
When
Which
you
is
look
another
at
important-
I'm
that's
glad you
important
brought
market.
this up because I was actually ripping through the topics and I was actually looking at the differences between the topics and the Nikkei last night.
Right.
While I
Perfect.
was watching the Michigan game, actually. When you look at the Japanese sector indexes, what is your best approach to look at Japanese industrials or Japanese auto, you know, Japanese?
Well, they don't have these great S&P type
Mhm.
indices. Or if they do, I don't have the data. It's not as clean.
Right.
The topics has their kind of industry topics, electric appliances, fishery.
There's like 30 of them.
It's different. And
Chemicals.
confusing. So I think I'm more of a one by one guy with that market. And there's a lot of, there's only 5 stocks in Japan over 100 billion market cap, which is a favorite stat of mine because that just means to me, okay, that, things can grow from here. I don't know how many there are in the S&P. There's a lot though. So I much more prefer to go kind of one by one, and especially in Japan, like there's stocks that are in industrials, but I think they're more so conglomerates involved in all these businesses. Like I said, I think the ones that Buffett invested in, they're not necessarily just industrial companies. They do a lot of different stuff. Yeah, so here's all those groups: fishery, glass and ceramic price. It's just very confusing to me. Wholesale trade, retail trade. I'm much more of a just go through the Nikkei 225 one by one, or the Nikkei 300. That's actually a cap weight version of the Nikkei. And just see what's going on.
The answer to your question, Todd, is there are officially 90 stocks in the S&P 500 above 100 billion.
Yeah, 90 versus, and the S&P's been great, but if I'm trying to be an optimist on Japan, there's only 5 with 100 billion. Toyota, SoftBank, Nippon Tele, and 2 others I can't remember off the top of my head.
Honda up there?
So, what's that?
Honda?
No. Not 100 billion, but probably in the upper echelon of the topic. So I like what the autos have done. I like what I think Sony's starting to improve. Nintendo
looks so good. I'm looking at it right now.
They're. I mean, I'm excited that they're actually doing something with their IP as a 90s kid.
What are they doing?
Movies. The Super Mario Brothers
movies. Super Mario. Watched that over winter break with my children.
Was it good?
Wonderful. Yeah. So the soft spot in me can't say it was bad.
I enjoyed it.
Is it amazing? No. So I don't have great sector data on Japan, but when you guys go through the names, it's very consumer, tech, industrial-esque heavy, very, very conglomerate heavy, and they all look really strong. Maybe a little too stretched in some cases. And then the financials too. Don't forget about the banks there actually doing something for the first time in years.
Yes, they are. Is Japan your favorite region outside the U.S.?
Yes. Yeah. Japan, India, and then I got to splice and dice Europe to an extent.
You don't think we get a little rotation action into Latin America? A little, how you doing down there?
Hey, Brazil's been good.
All-time high for Bovespa. All-time high.
Ex-China beneficiary going on there. My only concern with Brazil is that those big mining names, Rio, Vale,
it's a lot of it.
Glencore, they always feel like a rug pull. The charts are super interesting from a 20, 30-year perspective.
Mm-hmm.
And then they start to work, and then something happens, and that's it.
I got one more question
Which
for
is kind of
Todd.
like Japan in a way. But
one more question for Todd. I was looking through all the countries, price in local currency, a lot of all-time highs. Germany, Denmark, Australia, Bovespa.
Keep going.
I mean, I could keep going. We could keep doing this, right? But my point is, and then some obscure countries as well that some people might not be looking at. Plenty of new all-time highs. We're going to talk about it on tonight's conference call. How much weight do you give that? Knowing that the ETFs that are priced in US dollars don't look like that, right? How do you approach that scenario?
Well, do I have a hedge product available? Japan and Europe I do, but a lot of other stuff I don't.
Correct. Wisdom Tree, get your act together. You listening? We need more
Yeah,
hedged
we
products.
need hedged everything. Wisdom
Hedged
Tree.
Brazil would be dope, right?
That actually might exist. To be honest with you.
Oh yeah, it might.
I think it may. But hedged Peru. I look at it as okay, it's part FX, the currency, but it's still strength. When you start to look at the stocks in different currencies, there's still more stuff going up and down, right? I think just keep that in mind. It's all about the perspective. And then with some of the currencies, it's not like there's that big of a difference for the FX. I get it in some EM countries, the FX can really impact returns, like Argentina.
Yeah.
Right.
But for the more developed stuff, outside of Japan, it's not that huge of a difference, I believe. Especially, and I'm thinking Europe here. So, I give it some weight, but I also go back and say, all right, it goes back to this idea of the perspective that these things have gone nowhere for whether it's 2 years, 10 years, 20 years, and that's just a lot of opportunity for this year and next and however long after this.
That hedged Europe fund that Wisdom Tree has making new highs right now.
Yeah, it's hedged or unhedged. When you get stuff going up like that, hedged or unhedged, it just means it's flat out strength. All right, don't listen to the nonsense that's out there trying to scare you away from investing.
There are some massive bases in developed Europe, also, just monster.
Yeah, the industrials, a lot of interesting names there.
In Europe,
Volvo, Siemens, the aerospace names. Financials are actually working.
do we have ADR?
There's not a lot of tech there, which is kind of good. What's that?
Is there an ADR for Volvo? No, right?
I don't think so.
No.
Which is always frustrating.
No.
That's why you just end up using
it's
the ETF.
OTC, Steve.
Yeah. Okay. All right.
What is this? This is Poland.
It's Poland?
That's another one. Whatever you got here up on the screen.
Poland, new all-time highs.
The wig. ETOL. If you want to buy it here in dollars.
I don't speak Polish, so
All
I
right,
can't
guys,
pronounce this.
Let's let Todd go. He's been more than.
Thank you, Todd.
He's hanging out for a half hour this morning.
I'll hang out for 3 hours. I don't care. We can just do this all day.
Dude,
Todd,
you're the man, Todd.
Good luck tonight. Syracuse versus Duke. Wishing you the best.
Oh, we're gonna get smoked.
Yeah, you probably will. Thanks again as always. Talk to you next time.
We'll see you in New York.
Adios.
Bye, Todd.
Yeah, Rachel was asking about the zloty, so just throwing that out there.
Hey,
Polish market down here. I've never been. I think I would like to go though. What do you think they have?
Polish market, dude. Get yourself
Pierogies?
some
Kielbasa all day,
pierogies,
man.
man.
Yeah.
Kielbasa, hell yeah, man.
All right, let's talk about some headlines here.
Hold on, what's the best before your headlines? What's the best way to make pierogies? Boiled, fried, or sautéed?
I'd boil them. That's just me.
Fry them.
Sautéed. Look at that.
Really?
What? Hell yeah, sautéed, man. Nice little crisp. Yeah, that's the move. Sautéed.
All right, I would boil or saute. I wouldn't fry them. Definitely not. Anyway,
I wouldn't boil them.
All right, well, let's talk some headlines here. All right. In EV news, we got some delivery numbers from the quarter, obviously, with the calendar turning. So Tesla says they delivered about 484,507 cars last quarter. That was about $1,000 over the estimate there, a little more than that. We also had delivery numbers from Rivian. They said they produced 17,500 cars in the quarter.
So I would assume that this is not a coincidence. The EV guys all coming out with these numbers on the same day.
No, they always do. Every quarter they do this. First day of the month, the first day of the quarter, they all drop their numbers. So Rivian guiding that they will produce about 57,000 cars this, or actually, that's their full year number from last year. 57,000 cars delivered for 2023 for Rivian. That is basically above the consensus 54,000 vehicle estimates. So they beat their consensus estimates on that. Tesla deliveries were above
Well,
as
hold
well.
hold on. It must not have been too good of a beat, sir, because the stock's down almost 10%.
I'll be honest, I couldn't find any actual estimates for Rivian. I was going off their own release, which said the estimate was 54,000. That was like the consensus guidance, 54,000 cars for the year. So I don't know if Rivian's big enough to have estimates from Wall Street firms.
Yeah, who cares?
What?
Who cares about Rivian?
Yeah, no, that's what I'm saying. So okay, Tesla, Rivian deliveries. Let's see. Baidu called off. They were supposed to buy a unit of Joy's ticker YY. They were supposed to buy Joy's live streaming business, and they are not buying it anymore. So YY was down on that.
So
ASML
is YY the Twitter? Is that that's the Chinese Twitter, I believe?
No, that's Sina.
No.
Oh,
he's right.
SINA. Yes. What, JC?
No, you're right. It's the Chinese Twitter. Or at least it used to be the Chinese Twitter. So
Yeah,
it definitely was. You're not wrong there.
What happened to Sina?
I don't know.
On. Huh.
Sina Weibo, right? WB?
Weibo. That was it. There was a weird thing. One owned the other one. I don't know. But
can't keep anything straight over there. The big global headline from this morning was that ASML, they had some of their shipments to China blocked by the Dutch government. This is keeping with the White House's Chinese import or export bans. So there was that headline. And then my favorite is Wall Street's biggest Apple bear, the analyst at Barclays, downgrading Apple to underweight. I think definitely the only major firm to have underweight rating on Apple right now. There's some smaller shops that are underweight Apple. They cite negative iPhone 15 sales and no features that will make the 16 compelling. This guy's been bearish pretty much all. He was pretty bearish all last year. He had a neutral weighting and lower price target. So he is definitely the street's biggest Apple bear. And
I like it. I think it's a really simple story. The valuation for Apple, you're just paying a lot more for this business than you would have to pay for other tech businesses. Even the mega caps. It's gotten very expensive. I like that. Underweight Apple, I'm with them.
Yeah, the only underweight from any major firm on the street. And yeah, they were neutral. So they went from neutral to underweight. And
stock's down big.
Well, it's not every day. I had to go back. Actually, I kind of gave up, but I went back to 2019, and then I just stopped looking because I didn't want to go anymore. But I couldn't. I had to go back then, and I still couldn't find the last time Apple had a downgrade to sell, right, from a major firm. It doesn't happen very often. It's pretty rare. So I thought that was interesting.
NASDAQ 100 looking awfully failed breaky out here, JC.
Let them dance, man.
Okay. I knew that was coming.
Let them dance. The year literally just started 9 minutes ago.
Year-to-date returns are not looking good.
They are for crypto.
That's what I said this morning. Yeah, they are for crypto, right?
Year-to-date returns crushing it this year for crypto. Just call it a year. Just drop the mic, call it a year on the right.
Strange to see them starting the year moving in completely opposite direction. Cryptos and stocks.
Is it though not strange? I feel like in the short term, they're dancing to different beats in the short term.
When I look up cryptos, the next chart I pull up is ARK.
One's like pumping their fists, and the other one's got some 90s hip hop going. Like they're doing different things. Have you ever seen those soundless dance floors where everybody's got headphones on and they're dancing, but you don't hear any music? What is that called?
Silent rave or
silent? Yeah, like a silent.
That's the thing.
They're hilarious, dude.
That's the thing.
They're so funny. What?
That's a thing.
Yeah, it's like a dance floor, but you have to put on the headphones to hear the music. So when you walk by, you just see a lot of people dancing and no music. It's really funny, actually.
Wow. Okay.
Yeah,
Hmm.
it's
Used to
great.
me.
Yeah.
Coinbase.
It looks dumb as hell, but you feel good.
It does look dumb as hell to the outsider, but the people on the dance floor are having a
Right.
great time.
Guys, it sounds dumb as hell.
Makes me laugh. That's all that matters to me. This is a very selfish endeavor, Strazza.
All right. We've got Pat Donawilla here. Before we bring him on, was there anything notable in the hot corner you want to talk about?
We did have a big one. It's that biotech theme. So why don't we talk about
Yeah,
it?
hit it.
Yeah, all right.
So hot right now.
So it's called Silent Disco.
Silent Disco. That's right. That's it.
Calvista Pharmaceuticals. KALV. JC, it was just last week. I think you had asked me, is it anything out of the ordinary? All of these big biotech buys that we're seeing. And it is. And they keep coming. And it's institutions buying in size. In this case, 6.5 million reported in a Form 4 late last week. Venrock Healthcare Capital Partners. You look at this chart of KALV. I like this. Small one, disclaimer, $430 million market cap, so do your own due diligence. But the reversal is really shaping up in this one. It looks good here. Making new highs. It's closing a big gap from the fall of 2022. And then another one that stands out would be this High Peak Energy. HPK, CEO. Form 4 buyer, 2.4 million. That's a big purchase. 0.7% yield, $1.9 billion market cap. These energy charts, though, don't look great. You see this here. You got some sort of a breakdown. Now we're stuck below a big overhead supply zone. This one's been messy for a long time. I don't know. I don't love energy, but these two definitely stood out. And then
When you say you don't love energy, you're specifically referring to oil and gas, correct?
Yeah, that's right. They make up, what, 99% of the energy sector?
Oh, is that all?
Listen, have you seen these love sack couches?
I was about to say they are so expensive.
I want one so bad.
What is that, dude?
They look so
they are thousands of dollars.
Yes.
Like,
and then like
$10,000.
To put the surround sound in them, it's like another couple thousand. They have speakers built into them. It's a whole experience.
Is that really necessary?
It just
No.
it looks I want to try one. I want one. They look awesome.
Their whole thing is they have like like you can rearrange the pieces, right? So you buy like some pieces and you can just rearrange them however you want.
Around. Yeah.
They're so expensive, man. Oh my goodness.
Expensive. I know. Anyway, Lovesack made our list. Andrew Hayer. And then this global star, GSAT. Again, telecoms, not for me. Oh, and then Joby Aviation in the options market. I am so rooting for this company. This is the mini helicopters. Woo. Take me from Key West to Miami.
Right.
This is Joby Aviation. I think they were a SPAC. Yeah, this one was a SPAC.
Yes, they were.
Interesting setup here. I love this idea. I hope it works. 4.5 billion market cap for an idea.
It's one of the only SPACs that's actually kind of working a little bit.
You say that every time we find one that's working, and I
do.
Like
there's like three. There's like three.
You're a
Spencer,
hater.
Your New Year's resolution should be to not be such a hater on SPACs and shitcoins. You're giving them too much trouble. It's exhausting watching you. It's exhausting, Spencer. Like you don't have to be so upset about shitcoins and SPACs. Like just let it go.
In a bull market,
no
I should own more shitcoins.
To keep this rage inside of you, like there's no reason. It's not necessary, Spencer.
I want you to buy a SPAC. You should buy a SPAC.
I've owned SPACs. I rode them up, some of them up and some of them up and down.
Just drip it. Like every day, just pick a SPAC and just buy it. Like,
I'll tell you.
And then the next day you buy a shitcoin. Just a little bit. Just kind of drip it.
I owned this EV trucking SPAC, Hyliion.
And how's that working out for you,
No,
Spencer?
I sold it a long time ago. It worked out great, actually.
We need you back. We need you back. It's the year of the shitcoin, and we need you ready. We need you focused, and you can't have this negative bias, this aggression. It will not stand, man.
Okay.
It's aggression.
Is this HLN, Halion?
HYLN. It's 80 cents.
Dude, what is? I don't know. I don't think.
Okay, exactly.
Why don't we bring in Donawilla? He'll tell you. He knows all about SPACs and shitcoins.
My God, we should. We need a Spencer scan.
Hey,
and we could just
talking shitcoins.
Happy New Year, Patrick. Happy New Year, my friend.
Happy New Year.
Are you in San Diego or are you in the Qs?
I'm back in San Diego. I was in Qs for a little bit. Crazy travel plans as always. End up missing a flight or two, but it was good. Good to be back with the fam.
Better weather, better tacos.
Yes.
Better looking
very
females.
nice getting off the plane and seeing palm trees, and that's nice.
They don't have palm trees and tacos in Syracuse?
Tacos, they're not as good, but
they have overcast and hills, right, Pat?
What's up?
Overcast and hills.
Yeah.
Yeah.
Patrick, do you always watch Bloomberg TV in the background while you work?
Not always. I just keep it on. I think it's a little better than CNBC. I like to just keep it on just to see what everyone else is kind of, aware of.
Me too, buddy.
But other than that, I find myself pressing the mute button a lot.
Patrick looks like a guy who doesn't get stressed when he misses a flight or two. I think that's a great description of Patrick.
Just another day. No big deal.
Yes, I missed it.
Strazza bugs out. Like Strazza, it's like 4 hours before his flight.
Yeah.
We're 5 minutes from the San Diego airport. There's never any line at the San Diego airport. And Strazza's like freaking out. He's sweating. He's bugging out. Remember?
Yeah. Every time I travel with JC, he does his best to try and get me to miss my flight.
No, I want you to be efficient with your time, and sitting there for hours at the airport doesn't make any sense.
You never know, right? You never know what's gonna happen.
You miss a flight, you miss a flight. Get on the next one. Right, Pat? Tell them.
Exactly.
Yeah, that's good. That was good.
Pat, what do you are more observant of what's being discussed by some of the brighter minds out there than almost anybody else, really, I would argue. What are the smart folks talking about? What are the smart folks pointing to? What are you seeing?
The last 2 weeks have been a lot of, just what you expect, kind of people really looking way too far out at the next year. When you guys know, in reality, you kind of just take the data as it comes in throughout the year. But for some reason, whether it's just benchmarking or whatever, people, I think, tend to make these forecasts or really think about the next year. In one sense, that's good, but you can also miss a lot that way. But as far as like actual market stuff, it's been that rally in small caps. Just really, really, really big. The 9-week winning streak, of course, Strazza had an awesome chart on that. And the takeaway there is just that, you can totally continue higher after a streak like that. And if anything, that's not something you typically see at tops. It's kind of either middle of a bull market or towards the beginning. So, everything's looking real good. We peaked exactly 2 years ago on the first trading day of 2022. And, here we are, kind of doesn't look like we're getting the all-time high today, but, the fact that we've recovered and we're just now starting to resume that uptrend after 2 years of nothing, and a 30% drawdown and some of the worst bearish sentiment that we've seen since 2008.
I'd like to point out the fact that if you throw an anchored VWAP back to those former highs and the Qs and S&Ps, even the Russell 2000, the average buyer over the last 2 years is very, 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 very profitable.
Yeah.
Patrick, where's sentiment at right now, you think, on the Twitter?
Ooh, it's really a tough read right now because you have people that I think were maybe not bearish, but at least really skeptical that are just now starting to get bullish. And then you have people who have been bullish who are starting to get real bullish now. And I hear people talking about perma bears a lot, but I don't really hear them that much. You don't really, at least from what I'm seeing, I don't see too much of that. So
Perma bears stop doing their late night Twitter spaces.
It's a little concerning when you see no bears around and all that, but I think on the bright side, whenever we get like a 5% pullback, you see people losing their minds again. So that kind of jumpiness is kind of encouraging, I think.
What are the best charts going into this year? What did you write about in the top 10 this week?
Ooh, best charts out there.
Yeah.
I mean, a lot of the most important indexes are some of our favorite chart patterns right now. I mean, the S&P, right? Giant 2-year base. It's not every day that you get to say that.
It's a double top. It's a double top. What are you talking about?
This is a parabolic top. This is unsustainable. Have you seen have you seen the trillions in debt, Patrick?
I know.
The consumer can't afford anything. They're
It's
going broke in March officially. I heard from
These are actually
the
surprisingly accurate arguments, JC. I'm surprised you're actually
in March.
You're doing a good job.
But don't you understand? In March is when the consumer runs out of money. You haven't heard? It's March. I got a chart from a perma bear telling me the exact date that the consumer runs out of money. I kid you not. This is a true story.
The 0 DTE options, they're bad too, I hear.
They're manipulating the market, Strazza. It's manipulation.
Crazy.
You have to be crazy to own stocks in this economy, in Biden's economy. You got weekend at Bernie's in the White House, and you're going to buy stocks.
Pat,
these are the arguments that they're giving me.
Anything interesting in the chart report you want to talk about?
So I tried to keep it pretty high level, just a lot of like year to date kind of stats, or 2023, because the year was in the books on, was that Friday? Yeah. But when you look at the NASDAQ up 54% this year, I mean the best year since the .com bubble, pretty much. I mean, that's mind-boggling to think about where sentiment was, and the year we had before that, and to think about that in terms of the implications for next year. I think a lot of people, we haven't seen that chase yet, and that chase is some of the most powerful part of an uptrend.
Couldn't agree with you more.
Pat, what about healthcare? Sohn likes the healthcare. I like the healthcare. Does anybody else like the healthcare? Seems like nobody else does.
I mean, it hasn't really gotten out yet, right? It hasn't really gotten out of.
So JC and Sohn or the field? I'll take JC and
Sohn.
Well,
let me ask you this: what areas do you like within healthcare? Do you like biotechs or?
I like barbelling the big mamas and the biotechs. I mean, I think if you're looking for the beta, I think you're going to get biotechs. It's part of the small cap rotation. I think small caps are a leader this year. So, biotechs, regional banks, from a sentiment perspective, nobody likes either one of them.
Yeah.
A quarter of the Russell 2000 is just biotechs and regional banks.
Hey,
each one's got like 250 of them. So it's like 500, more than 500 stocks in the Russell 2000 are just biotechs and regionals. I like them both.
JC, one chart that, I think, I know you look at tons of charts and you never just based it on one, but you could have almost played the entire last 2-3 years with that cycle composite chart you have. So what does that say for this next year?
The seasonality, for me, the fact that the market's been following seasonal trends is not a big deal. It's actually perfectly normal. I'm more interested when the market ignores seasonal trends. Like the fact that it's been doing so well exactly when it's supposed to be doing so well. Small caps are historically start outperforming in November. Sure enough, that happened this year also. So none of these things are a surprise. Like if anybody's surprised by it, it's because they probably haven't even taken the time to go look at history, right? Which is most people. I understand that. So talk to me when the market ignores seasonal trends. If, for example, February and early March, that late January through early March period, if stocks are ripping in that environment, that's interesting because they shouldn't be historically. If stocks have a shitty January, that's interesting for me because stocks usually do well in January. So, I like to look at it after the fact versus stocks are supposed to do well in January, buy stocks, that doesn't make any sense. We want to look after.
In what is a very, very risk-off day for the market today, S&P down big, NASDAQ down.
Is it? The Dow's down 30 basis points. Is it very risk-off?
So healthcare is leading because it's defensive. It's up with the other defensive groups here today, like energy and utilities and consumer staples. So you're seeing that.
Is IBB defensive?
No.
XLV is defensive.
Yeah, but IBB is up too.
Really good.
Yeah, but IBB is up a lot. And this is biotechnology. So historically, biotechnology is not a defensive sector. Maybe in Connecticut, it might be defensive. But for the rest of us earthlings, it is not.
It's barely out. It's not even outperforming XLV. So
it's up 1.3% so far this morning. Not exactly a risk-off index.
Anyway,
yeah, I was surprised to see Bitcoin doing what it's doing today, breaking out of a 1-month consolidation when the dollar is kind of strong today.
That's what we said.
It's a very risk-off day, Strazza says, with Bitcoin up 3.5% and biotech's absolutely ripping. So risk-off. It's crazy how risk-off it is.
Go look at the price action. It is.
All right.
It's early.
Let them dance. Let them dance.
Put in my chart, Fonz.
But to Strazza's point, there's a lot more red than there is green. So,
Defensive. You said I was misleading viewers. Boo you. These charts look exactly the same.
All right. I guess we'll see what happens in 2024. My suspicion is that healthcare outperforms and stocks do very well this year. And I guess we'll see what happens.
All right. Well, bookmark this one.
Bookmark this one. We'll come back. You guys in the chat, remind us if we forget, because we talk a lot of shit around here, so we forget. We can't keep track of all of it. But my suspicion is, and I don't have like a bet on where I'm long healthcare, short S&Ps, but I am betting that both do well this year. Healthcare outperforms, biotech outperforms healthcare, small caps outperform large caps. I think all of that is a theme. People just don't own healthcare. I think the unwind is on. Let's go.
How about this candle in Merck? Man.
What candle in Merck?
A lot of these charts look really good today.
The market opened 28 minutes ago. You're talking about the daily candles?
Merck is erupting. Yeah.
Can they dance, please? Can you let them dance? Let them dance.
Let them dance.
Hit that recess bumper, Spencer. Hit it.
Tough Sunday for the Dolphins.
Better holiday. Cubans or Italians? Who does it better?
Italians.
I think the Cubans do it better.
Yeah.
Wait, what
holiday?
New Year's?
I wouldn't know. I've never been to a Cuban holiday party.
Christmas Eve. Christmas Eve for Cubans is I think Cubans do it better.
You think so? All right.
I do. Listen, I don't care. The fact that I'm Cuban, like Cubans do a lot of, like Italians make way better wine than Cubans, right? Like it's not even close, right? So it's not like I'm being biased here. I'm just calling it like I see it. Okay. Christmas Eve, lechon, arroz moros, maduros, yuca frita, the whole thing. Let's go. Flan, tres leches. Let's fucking go, right? For the Italians with the 7 fish and half of them suck, no thanks. Cubans do it better.
Tres leches, so good.
So good.
Yeah.
Yeah. That's why you would like in India, they got the rasmalai. Rasmalai is like if tres leches and a cheesecake had a baby in India. That's rasmalai.
I got to try some of
JC,
this.
I actually made it once. It wasn't bad. It was pretty good.
JC, have you ever been to Blue Ridge Estate in Poconos, the winery there?
I don't drink wine from Pennsylvania.
Okay.
What kind of savage do you think I am?
I was there the other day. I don't know. It's like an hour away from you, probably.
Yeah, you don't want to drink that stuff. It's poison, bro.
It's like,
All right. Hey, I learned the difference between a vineyard and a winery. I didn't know that before. So
Wait,
We
what is the
talked
difference?
about this. I own a winery. I don't own a vineyard.
right.
What is the difference? One is like the
The vineyard grows the grapes and the winery sells the wine.
A
okay.
vineyard
That
is
makes
the
sense.
plural of a vine. So more than one vine is a vineyard, and that's where the grapes grow. And the winery is the company that produces the wine.
That makes sense.
There you go.
So if you want to make $1 million in the wine business, start with $2 million. If you own the vineyard, if you own the winery, the margins are way better.
Ah,
All right.
Brett Conrad in the chat talking about Pfizer. I'm looking at the chart right now. I kind of like this. Coming off, a well-tested level at these former lows around 26.
Brett Conrad, to be fair, is also a healthcare junkie, super biotech junkie. So you have to understand his bias. Friend of ours, right?
Mhm.
But he will admit that he is a biotech junkie. So you have to understand his perspective here. I'm not saying he's wrong. Just putting things into context, Brett. Just call it like I see it. He's like laughing right now. Yeah.
By the way, I know I hang out with you guys too much. It's because I made an Ozempic joke over the weekend. I was with some friends, and somebody in the room, unbeknownst to me, was on Ozempic, so that was uncomfortable. So
Yeah, you got to be careful with that.
thank you for that, everyone.
Yeah, you don't do that at like a dinner.
Tell that person to exercise and eat healthier. They don't have to take drugs.
They do both. I had no leg to stand on. It was
You don't need
uncomfortable.
drugs. You could just
Anyway,
exercise.
all right.
Eat healthy.
It's Tuesdays.
Not that hard.
It's Tuesday, so we'll have the spaces with the chart report, right, Pat? In an hour,
yeah.
right? We got spaces at 11. We got a chart request live at 1, and that's what we got. So thanks.
I'm liking that straddle. I'm liking that straddle in Lily. I'm liking it. Long straddle in Lily. I'm really into it.
All right.
I'm telling you, I'm going to be talking about this all week. I like that.
And
Sean, if you're out there listening, price it for me, baby.
All-Star Charts conference call for members tonight. If you're a member, you know the drill. If not, go to allstarcharts.com/join. The link is in the description, and that's how you get access to the call. That'll be tonight at 6 p.m., as it always is, twice a month. Thanks to Todd Sohn. Thanks to all of you in the chat. Hey, do me a quick favor. Hit that thumbs up. It's the like button that looks just like my thumb right there on the screen. We'd appreciate that. I'd appreciate that. Have a good day. Go make some money, and we'll see you later.
That Madrigal, the biotech, making moves. Shout out, Jonathan.
I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off.